the Department of Energy's stockpiles into the markets to fund historic cleanups that have nothing to do with the current producers. So you've had all of the stars line up for what will make a bull market. So what have I done? Again, I have bought another 1 million shares of UEC alongside Morgan Stanley. Rick Rule's fund bought the same amount. We've all kind of, and we wanted more, but Amir didn't want to dilute his company, and we all participated in the financing. So what I'm trying to get at now here is, okay, what is going on in the North American markets? Well, the producers, there's only a handful of producers, they're trying to satisfy these bankers and these analysts and tell their shareholders, look, we did what we said we would do. We would go and produce. But Dan, what is the point of depleting your reserves when there's no true cash flow per share to the shareholders? So what you're actually doing is diluting the shareholder, because that value as a shareholder is worth less tomorrow than it is today. And that's another metric that I try to explain to my fund shareholders is you have to think of yourself as an owner of this company. And every move that the management are doing, is my company going to be worth more tomorrow or less? And unfortunately for most of the market, what their strategy is, they're depleting their reserves, and their companies are going to be worth less and less every day moving forward. And that's why I'm so bullish on UEC, because what they're doing is doing the opposite. They're the contrarian in the market, saying this makes no sense, we're not going to do that. And hence why the fund managers at some of the biggest funds in the world are looking at it going, hey, we want to be part of this. And when you say, what will this end up? There's 3 cycles in the market. You got the boom, the bust, and the echo. And Amir will come and consolidate this whole U.S. sector in 3 to 5 years, and you'll see how this will all change back. So just like the gold market has taken off here and everyone's feeling great and every idiot is a genius now, well, I think you'll see that in the uranium markets. Probably not this year, and that's irrelevant to me, Dan. Like, you know, I go long and strong, and I can hold a position for 6, 10, 12 years. You know, some of my positions, look at BRI, we've been a shareholder for over 6 years, and I'm totally happy of adding more to the position because I don't need many stocks, I just need the best stocks.
Marin, inflation is the first thing that comes to mind when discussing negative interest rates. And I know you've been like the contrarian's contrarian. And, you know, I'm wondering if negative interest rates are actually more deflationary. I have to imagine that not having a yield gives savers and investors less money to spend into the economy, less money to reinvest in the markets. What are your thoughts on negative interest rates? Is this inflationary or this is deflationary? I know it sounds like a basic question, but everybody seems to be on one side of this. So I'm really curious what your thoughts are.
Well, you know, whether it's luck or good analysis, I've been pretty spot on where this has all gone the last few years. This is where I think it's going to go. You nailed it within your own statement. Negative interest rates are going to dry up capital, hence, by definition, will be deflationary in most markets. However, within that general macro call, you will have pockets of insane inflation or bubbles. For example, where I see gold going. Gold is it's a preservation hedge. So if you're a family office, okay, and a lot of people don't understand this. Do you know that there's over 3,500 family offices in the U.S. that used to invest in hedge funds with a minimum assets under management of over 50 million? That's kind of the definition of a family office. You got to have 50 million. So Dan, your family will be there in a couple of years, but you know, that's the definition of a family office. There's 3,500 family offices with at least 50 million or more that used to invest in hedge fund managers. But what happened with the hedge fund industry? Every slick, smart cat started to become a hedge fund manager. And they did not own their own shares. You know, less than 25% of the hedge fund managers actually own shares in their hedge fund. So what these family offices have figured out is, wait a second, these hedge fund managers actually aren't beating the market. They're diluting the family offices, and these hedge fund managers had to take massive punts, big risks. Why? Well, they're not shareholders, so for them to make real money, you either get a huge fund with billions and billions in assets under management, hell no. So now, why would you invest in a hedge fund with your main quarterback has no skin in the game, and he's going to take massive risks so he can make 20% on your money. Now, what happens now is the hedge funds are sitting there going, okay, we see that model doesn't work anymore. So they're trying to create their own strategies. And where do you put your money in a negative interest rate market? So what happens is people will start parking their money in gold to protect themselves from the negative interest rates. But people are also going into real estate because they're looking for that yield. So cap rates are going to be going down significantly, so that increases your risk. Remember, Dan, risk is directly associated to the price you pay for the asset, okay? Mm-hmm. So now you're going to see bubbles within the sector. We're not yet at the bubble for gold because we're in the early innings here, but it will come. It will happen. And these stocks that you're looking at that are, gone from 75 cents to $1.50, they're going to go to $15 because these family offices are going to look at these metrics, they're going to figure it out, and they want to be positioned in this. And then you got the Asian money, you've got, the European money. There's a lot of money on the sidelines scratching their head trying to figure out what do we do. And more importantly, if you look at the demographics globally, the baby boomers have money. And they're looking at preserving their money. They're going to retire, they want to leave a little bit for their kids, and they want to enjoy their life. And everyone's going to live longer because of medical advancements. So what are they going to do? They're going to want to put their money in places that it will be safe. And gold is definitely one of those areas. And right now, gold takes such a